The next one is about expenses. Yeah, for expenses, we need to determine what will be the amount of cash paid to the services, any kind of services. So the formula for that will be expenses charged in the profit and loss, okay, minus any beginning prepayment, okay, plus ending prepayment, prepaid, yeah, plus beginning account payable minus closing account payable. This is your assets, this is your liability. So it follow different rule. For asset, minus prepaid beginning plus closing. For liability, plus beginning minus closing. Okay. Or you can use a different way of it. Yeah. Expand charge in the profit and loss plus increase in prepayment or minus decrease in prepayment plus decrease in account payable or increase in account payable. So we are looking at the increase or decrease. So this is your expense. Okay. Expand plus increase in your prepayment, okay, minus increase in prepayment, or the other way around, or minus decrease in prepayment, or plus decrease in prepayment. So this is the formula, how you're going to calculate that information. So in this example, your increase in prepayment is 1,500. Increase in wages and salaries is 1,000. So your decrease in your other expenses is 1,200. So we have three categories of items here. So how to determine this? We have other expenses, 76,000. Okay, plus the 1,005. Okay, plus the 1,002, and then you're going to minus here 1,000. So this is the total payment to employees. Yeah, total payment. This is for employees. I made mistake here. The 1,000 here is for employees. Yeah, wages. It should go for employees. That one will go to other suppliers or services. These two is for other suppliers and services. So this is specifically for employees. Okay. So based on the calculation, now we know how much we paid the supplier for purchase, for the service, and as well for the employee. So total payment to suppliers and employees, we have 679. So this is our total payment to the suppliers and employees. So we can use the same techniques to determine the interest paid. The interest paid, okay, from your income statement, the amount is 4,000. This is from your income statement. Okay, interest expense is 4,000. There is an increase in accrued interest, increase in your liability, interest liability by 200. So it means that you only pay 3,800. Let me explain again. In your income statement, your interest expense is 4,000. Okay. In your accounts, you have increase in accrued interest payable, of 200. So it means that from this 4,000, you don't pay all of it. Yeah, you still have 200 outstanding. So that's why the interest paid for that year is only 3,800. Yeah, so this is method number two. Or you can use the T accounts here. This is your interest accrued. Yeah, this is your interest accrued. Okay, accrued. Let me go to your balance sheet and see what are the amount. Your interest accrued previously is 0, now is 200. Yeah, now is 200. Okay, your BD is 0, your CD is 200. Okay, so in this example, when if you assume all this interest is not paid immediately, so you're going to debit interest expense, you're going to credit 4,000 here, 4,000. So during the year, at the end of the year, you notice that your balance is 2,000. So your total balance here is 4,000. This is 4,000. So the missing number, the amount paid is 3,800. Okay, this is method number one. Method number one. Okay, or if you use the second method, if you can understand this, it will be much easier for you. Your interest expense for that year is 4,000. You don't pay it all. Why? Because you see that your interest liability increased by 200. So it means that you only pay 3,800. So that is for the interest. You can do the same things for your liability as well. Either you want to use this T accounts format. Your deferred tax liability is 5,000. This is your opening. Your closing is 8,000. Yeah. In your income statement, you have the tax effect recognized in other comprehensive income. This is given in your income statement, 600, and the income tax deferred is 3,000. The income tax deferred is 3,000. Okay. Okay. So in this example, yeah, based from this, you should know your ending balance, that is 8,600, and the movement here is the movement of your tax. So the current component of income tax expense can be calculated as follow. Your income tax expense is 30,000. The income tax deferred is 3,000. This is the amount that we calculated above here, 3,000. So the current component of your income tax expense is 27,000. So this is the current component. So all this, for each item, you need to calculate what is the real cash payment or cash receipt. So from there, you will able to generate, yeah, your net cash from operating, yeah, your net cash from operating. Yeah, there is cash flow from operating, cash received from your customer, cash paid to supplier, interest received, interest paid, income tax expense. So this give you net cash flow from your operating activities. Net cash flow from your operating activities. Okay. Figure 17.8 shows you the statement of cash flow based on your what we have calculated before. Yeah, we have cash flow from operating here. The amount is 8775 0, or another way to come up with this figure is by using these reconciliations based on the profit for the year, where you can go back from the profit 74,000 and then do adjustment for depreciations. Yeah, add back depreciation. This is non-cash item, plus gain on sale, also non-cash item, and record any increase or decrease in your current assets and also current liability. So increase in account receivable mean increase in your current assets, you're going to minus. Increase in current asset, you are going to minus. Yeah. Decrease in interest receivable, increase in current assets, you're going to minus. Decrease in your current assets, you're going to plus. You're going to plus. That's why we plus. So we have to remember this formula. Increase in prepayment, this is your current assets. So you're going to plus, yeah. Sorry, you're going to minus. Increase in current asset, you're going to minus. Increase in account payable, you're going to plus. Increase in accrued interest, you're going to plus. Decrease in account payable and including salaries and wages, minus. Increase in current tax payable, yeah, you're going to plus. And increase in deferred tax liability, you're going to plus. So the formula is increase in current asset, you're going to minus. Increase in current asset or decrease in current liability, you're going to plus. Sorry, you're going to minus. Increase in current asset or increase in current liability, you're going to add. So this is the formula you're going to add. So you're going to adjust, do reconciliation from your profit and loss account, yeah, from the profit and loss accounts. So that gives you net cash from your operating activities. Net cash from your operating activities. This is the example of your statement of cash flow based on indirect method. Yeah. So the second one that we did before, this is what we call as the indirect method. But please be careful. You need to have a separate section for your interest received, interest paid, and income tax paid as required by the accounting standard. So you don't have to put it on the top here. You must have a separate section for that. The 5050 3,825,000. So this is the indirect method. So for your final exam later on, you will be given question where you are required to prepare the indirect method. It will be much easier for every one of you. Yeah. Okay. Let us go for the for your investing activities. How you're going to do calculation for your investing activities? You have your assets, for example, yeah, plan. Your beginning balance is 150,000. Your ending balance is the balance of your asset is 165,000. And during the process, you already acquire new asset. This is a new asset plus 50,000. You dispose one asset with the carrying value 10,000. You sell it at price of 14,000. You still remember? And you also provide depreciation for 25,000. Yeah, for 25,000. So depreciation will reduce the value of these assets. Okay. So the proceed from the sale of plant can be calculated as below. How to calculate the proceed? Carrying amount of the plant plus gain on disposal minus loss on disposal of plant. For example, your carrying amount is 10,000. This is your carrying amount. Yeah. The gain is 4,000. So in other words, you sell the asset for 14,000 cash. 14,000 cash. So this is your cash proceed. Yeah, this is your proceed from sales. Yeah, cash received from sales. That is 14,000. So this is how you get the cash proceed from sales. So for your investing activities, you need to put a purchase for intangible asset. You spend 15,000 for that. You purchase a new asset, 50,000 minus, and then you receive cash from disposing one of the plant, 14,000. So the net cash used in investing activities is 51,000, mean outflow of money, 51,000 to purchase new assets. Okay, even though you dispose your old assets, but it's not enough to cover the cost of purchase of new asset, intangible as well as the plant. So this is for your investing. And for your financing, you have this profit of 74,000. Yeah. And then please check that you have dividend paid in cash 50,000. So the net movement will only be 24,000. Yeah. Your profit is 74,000. You paid cash 50,000. So the increase in your equity on reserve is only 24,000. So if you look here, you know that from your financing, you also have borrowing of 10,000. It's given from the question, borrowing 10,000, and you paid dividend 50,000. So your net cash used in financing is 40,000 negative. So mean you pay a lot, yeah? You pay a lot for your dividend as well as, but you borrow money. You borrow money 10,000 and then you pay dividend 50,000. So this will be your statement of cash flow if you use the direct method. So this is the direct method, and the answer is your cash and cash equivalent at the end of the year will be 56,550. But I expect you to produce maybe the indirect methods. Okay. Other important things is about disclosure. Okay. ASB 107, IS 7 prescribe additional disclosure in the notes to the financial statement, including information about the component of cash and cash equivalents. Okay. The component of cash and cash equivalent, the changes in ownership interest of subsidiary, and also non-cash investing financing transaction. You must disclose that information. For the component of cash and a cash equivalent, you must disclose that information in the statement of financial position, in the notes to the accounts. And this is important to ensure transparency how items are reported in financial statement. And according to para 48, it requires disclosure of the amount of significant cash and cash equivalent held that are not available for general use. So this is another critical information because we want to know how much money we can use, how much we cannot use. Okay. About the changes in ownership and interest of subsidiary and business, the financial statement user need to be aware of there is any changes in ownership and control in order to understand the change in financial position of the consolidated group. We haven't covered about this. We have not covered the consolidated group in our syllabus yet, but inshallah, in the end of the semester, you know what is meant by consolidated group, whereby several companies originally we can combine or consolidate the accounts because they are under the same group. So maybe we have parents and son relationship there. When entity obtain control of a subsidiary or other business, any cash or cash equivalent acquired are deducted from cash consideration paid in determining the cash flow effect for obtaining the control. We're going to discuss that later on. And then for non-cash transaction, for example, you buy assets without using cash, okay? Non-cash investing or financing transaction need to be understood in order to comprehend the change in financial position of the entity. For example, last 2 weeks, we learned about lease, yeah? Last week, we learned about lease, whereby you can acquire or have right to the use of assets by using borrowing. No effect on cash, but it increase your liability. So these are another thing that you must disclose. Other than that is conversion from debt to equity. You change from debt, especially when you have convertible debt or convertible bond, you can change that to equity. Okay. Conversion from preference share to ordinary shares, or maybe you refinance your long-term debt to a longer periods, or you take cash from there. Payment of dividend through dividend reinvestment scheme. So this is another non-cash examples where you need to disclose in your income, in your financial statements. So investing and financing transactions that do not require the use of cash or cash equivalent shall be excluded from statement of cash flow. Yeah. The other major non-cash transaction is the purchase of plant, equipment, lease loan improvement for which company has not yet paid. So that is not involving your cash. So disclosure that are encouraged but not required is additional information that may be relevant to user in understanding financial positions and liquidity of the entity. So in short, I can say that statement of cash flow is important to users, to lenders, to bank to evaluate the ability of the firm to generate cash. We need to understand whether they have enough resources, what are the pattern of the cash inflow and outflow from the three categories. So it helps us to predict the future cash inflow or outflow. So we have two methods to present the cash flow statement. Either you can use the direct method or indirect method to calculate your net cash flow from operations. Okay. There are also a list of items that you must consider. You must need to disclose in your statement of financial position, as well as there are also items that might not affect your statement of cash flow. Statement of cash flow, because this item fall under non-cash transactions, and also additional disclosure. I think at least you have some basic idea about the statement of cash flows, and you're going to do more exercises during tutorial. So please take your time to read the textbook and look at the example, what it means by increase in cash, increase in current asset, decrease in current asset, increase in current liability, and decrease in current liability, and how it affects your cash receipt or cash payment. Thank you so much. Any question, Maya, Ali, Anaina, Madiha, Mehrab?